For TraderInsight.com, I'm Adrian Manns, and it's time for Doc's Daily Dose. Let's take a look at some of the scalper trades that we had on the trading plan for Thursday. We had some really good questions in the room. Bunch of you showing up every single day, taking advantage of the War Room. That's fantastic. It's included in your subscription. There's no reason you should not be there. But let's take a look at what we talked about in the room, just in case you missed it. So this morning we had a couple candidates that were suitable in terms of scalper entries, and by suitable I mean the spreads were okay. Let's take a look first at what I mean when I'm talking about the spreads. All right, here we have a NASDAQ total view screen, and we see that on the market depth, for instance, on Qualcomm, we are spread 1 penny. So it's 77.21 by 22, right? Each level is spread just a couple pennies, and the inside market, most importantly, is spread by just a penny. So that tells us it's going to be easy to get in and easy to get out if we get into a trade. Qualcomm had these spreads right off the opening bell this morning, and we see that it had an opening bar. First 5 minutes of trading, it's always best to let that go by. That makes for the easiest entries, and in this case we see that check mark move that I like to see, and we get a nice pop up through 76.62, and then we had a move that ratcheted steadily higher and got us up into that 76.82 target. And if you'll recall in the room, once it hit 76.82, it popped right through. So we started trailing stops. I might have trailed them a little bit too tight. I was trailing a penny. Still managed to get out of that one with a nice little extension, 76.89. But had I trailed it a little bit looser and used maybe a penny or two of bleed back into the profit target, we would have had a much bigger extension than the one that we captured. But that's why we call it scalper, right? The goal here is to take the money and run. And QCOM on Thursday was definitely a very nice scalper opportunity. Now let's take a look at one that I actually missed in the room because I was explaining some stuff, and it is CSOD. Cornerstone On Demand Incorporated. This was another one in the room this morning that we discussed at length, but let's have another look at it and just make sure that everybody understands what the logic behind this one was. We had this move off the open, not tradable because the spreads were pretty wide at that point, although it did make a move straight down to the first profit target. Made a move back up again. Once it got up above this 36.67 line, it's time to look for that checkmark reversal type of an entry. But the next bar just opened right flat at the 36.67 line, popped up above 36.95, and at that point we called it in the room and said, let's take a look at a potential entry on a violation move back down through 36.95. That is in fact what we got. Got this inverted check mark. That gave us our clue. It was time to look for an entry. Spreads were nice and tight. 36.95 down to 36.67 happened over the course of a couple minutes. It plowed right through that number. And again, if you had a resting stop there to exit that trade, that's okay. But if you didn't, the thing to do is start trailing stops and see if you can't lock in additional profits. Once you're down to about 50% of the distance between 36.67 and 36.38, of course, you are absolutely not going to take any worse of an exit than 36.67. Once it hit 36.38, same thing, just try to ratchet in behind it. In the case of the room today, I was using penny stops behind these, although I didn't get CSOD because I was busy doing something else. But we did suggest using a 1 cent stop behind that one as well. Today was kind of a weird day. It was volatile, and I didn't want to get taken out of positions that were profitable with a big slip. A penny was the trailing stop of the day. Usually it's the case that it's better to have a little bit wider of a stop than that. But as we see, it did reverse, and CSOD hit 36.38 once again, and then trailed higher, 50% of the distance back up again, before making a couple more moves over the course of the session. As you know, the majority of what we do with these is to take them in the first hour of the trading day. So over the course of the rest of the day, you could have been watching this and looking for moves down through these bands once again. You don't want to be involved in this during the lunch hour back east, which is from 9 a.m., of course, Pacific time, which is noon Eastern, till about 11 o'clock Pacific time. Those are bad times to enter these scalp trades unless you can find a very well-defined range over the course of the day where price is just drifting. The other question that came up was just computing share size relative to gains, and of course that's a pretty simple calculation. A 20-cent move on 100 shares represents $20. A 20-cent move on 500 shares represents $100, and a 20-cent move on 1,000 shares would be a $200 move. Logical way to structure these trades is to start small, keep the risk to a minimum, never allow for less than 1.5 to 1 in terms of reward to risk ratio, and you should be on your way. So once you're making money with 100 shares, you raise it to 200 shares. Once you're making money on 200 shares, raise it to 400 shares, etc. Never want to start trading with large share size. Always want to get used to any trading methodology first, and then ramp up the shares once you start getting profitable. So if you have any questions about that or anything else, send me an email, adrian@traderinsight.com. I hope you had a great trading day on Thursday. Have an even better one in store for you on Friday. The best trader education anywhere, only from traderinsight.com.